Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Monday, September 18th, 2023. Before I click through all the charts, just want to encourage you to please click like. Please share the content, if you would, with friends and colleagues. Please become a Wicked Stocks YouTube channel subscriber if you haven't already. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Tesla report. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 index. Weekly analysis in the NASDAQ 100 index. And weekly analysis in the TLT, that is the long bond ETF for interest rates analysis. And two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor. We're always looking for 20% moves on those underlying stocks. Last week alone, we did Amazon and T-Mobile. We have a whole series of stock picks we've put out over the last month that are still pertinent. You can check it all out. Every single bit of it for 5 days, no cost to you whatsoever. Just check out wickedstocks.com, sign up, and you have 5 days to cancel your subscription at no cost to you whatsoever. Let's jump into the charts, start with the big picture, work our way into the day itself. Just a reminder that we came off this targeted channel resistance at 315.61 this week about 2 months ago. At the time, I've been mentioning how you should then allow for channel support as a downward retracement, and that happened in about 6 weeks. That is at 230.24 this week, and that was a full month ago. And having come off of that channel bottom, I've now been mentioning 2 to 3 month rally should be considered a possibility to 315.61, which is also part of another channel structure that is now well above the market at 333.03. So still anticipating the 315.61 to 333.03 area. I think over the next couple of months, I'd mentioned 2 to 3 months. Once we tested it, we're a full month into it. Over the next 1 to 2 months, we should push into that 315.61 to 313.03 area. On the way up off of this 230.24 channel bottom, which on the daily chart today is 229.05. We did have a descending 2/3 speed line that did roughly contain the market for the better part of a week, a little over a week, and then we gapped above it. And in the midst of that gap, the following day, we essentially tested what is meaningful channel resistance at 289.03. I say essentially because we rallied to within 1 point of this, so I'm going to call it a near miss anyway. 289.03, if tested today, able to contain weekly buying pressures. And once tested, and I'm going to say that we have tested it. But why I'm saying that is I do think the market is susceptible to falling back to the channel bottom. And I'm going to zoom in here in the upper 250s and climbing. 257.06 is the channel bottom, preceded by a new rising 1/3 speed line. New because that high from last Friday took out the previous high a week earlier by a hair. 278.98 is the new pullback high following the August low. And so we create new speed lines. And the new one now is 259.14. I like this zone to buy into if tested over the next few days, and I don't expect it unless we close today, for instance, below 267.39. I'll get to that in a moment. But if we do close below 267.39 today, we should Tuesday, Wednesday fall into this zone of meaningful support where we could bottom out for the week itself, quite possibly through next week, and once tested, rally back to the channel top at 289.03 and climbing. We could trade inside the upper 280s at upper 250s, both climbing at a very similar rate for the next couple of weeks. Now, that longer-term buy signal I mentioned at 315.61 and up to 333.03 is considered a 1 to 2 month target right now. And if over the next few days, for instance, we close above 289.03, I think we're inside of 2 weeks then from reaching 315.61, which is once again a really start of a range of resistance. Up to 315.61, up to 333.03, that if tested over the next few weeks, let's say we test this area by late October, can absorb buying pressures through November and perhaps the balance of the year, and we could fall off again back to channel support. We could trade inside this structure for the next 3 to 5 months perhaps. It would be a settlement at the end of any week above 333.03 that would then indicate the 414.49 all-time high within another 2 to 3 months, but we are a long way from that right now. let's get back to the day itself. I will zoom in here a little bit, show you the 289.03 channel top. If we push through 280.93 today, that is our intraday resistance. It would be a new pullback high above the recent highs. 280.93 is nothing more than this high here. That's a gap, part of the gap that is filled at 289.52. So 280.93 should set off follow through buying to 289.03, where we can top out for the week. This would be a good short setting zone for you aggressive day and swing traders, 3 to 5 day, 1 to 2 week swing traders. Once again, back into the upper 250s and climbing. That would be your objective. And once again, if we were to close above 289.03 today, then I do say, and I don't think that's likely, but it is certainly possible that by the end of the week we close above 289.03. And if we do, once again, 1 to 2 week target to 315.61, and I'd say a 3 to 5 week objective to 333.03. Those long-term resistance areas I mentioned a moment ago. Now downside, 272.49 intraday support. If we break 72.49, you should anticipate 267.39, where we can place a daily low, possibly into later week. This is an area, solid day trade support for day traders and perhaps 3 to 5 day swing traders. We could come off of 267.39 and back up to the 289.03 formation within 3 to 5 days. So yes, 269.39, just a session containment level, but nonetheless suited for those of you who like to trade the 3 to 5 day swing trade. Now, of course, if we close below 267.39, it is 257.06. That is our 1 to 2 day target. So if you're once again a swing trader and you trade, several days out, 1 to 2 weeks out, anywhere in there, if you close below 267.39, just know, that is an opportunity perhaps to go short overnight down to 257.06, 257.06, part of a range to 259.14 that can absorb selling for the week itself, and quite possibly through the balance of September trade. We could come off of here, as I said earlier, back into the upper 280s and climbing within a week or two of doing so. And the last thing I will say is, if over the coming days we close below 257.06, then we set up for another test of this 229.05, a long-term channel bottom, where we could actually bottom out through the rest of the year, better represented here at 230.24 on the weekly chart. Once again, above which this rotational sequence coming off of this low area, still maintaining a 2 to 3 month upside objective in the 333.03 region. I'm going to leave it at that. I'll leave you with, I think, the most appropriate chart of the day is probably this one right now. And I'll be back, of course, tomorrow with Tuesday's Tesla. Please click like, share, subscribe, and check out wickedstocks.com. I'll talk to you soon.